What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Also, consider subscribing as I do provide a technical analysis. So I look for my entries and exits for the week. Also, I do provide a daily pulse on the market at Hemi137 on X. So check me out there as well. But before we get started, remember to go ahead and hit the like button so we can get this thing started off right. Now, over the past couple weeks, we're kind of getting into a lull period. And we're ultimately waiting for September 18th. We're waiting for rates. That is ultimately what's going to dictate what is going on. Again, all we've heard about is rates over the past year, and we haven't gotten one. And now we have gotten hints from Powell and Jackson Hole that there will be rate cuts. It's almost guaranteed for September, but I mean, nothing is guaranteed, right? There's great odds that it will happen in September. But ultimately, what we understand is there's a couple different things that are currently going on. Now, to set up the current scenario, you have to know that inflation was the big concern. We pretty much talked about it all last year. Once we started to pause, I said that is no longer the concern. At that point is to look for when we start cutting rates, and that is pretty much how it's played out. And over the past year, we've gotten revisions on 880. Again, that's only preliminary. That's not actual official numbers yet, because I believe it's much worse than that. It's over 1 million unemployed. And this is something to keep in mind. I've talked about all these specific points. And again, I'm not trying to fearmonger here. I'm just trying to provide you insights. You know where we are going and have some sort of thesis on how this is going to play out, because it helps in positioning. It helps in ultimately understand when to invest, when to just hold back for a little bit, just for these events to kind of occur, when to apply risk. All those kinds of things are really important. Being said, you are having an election year. It's a very, very crazy election year that's currently going on. Ultimately, what's going on, you can get into all the politics about everything that's going on, but ultimately, what you need to understand is over the past year, there has been no debt ceiling. This debt ceiling will come back on January 1st, 2025. So if you couldn't tell, if you've been watching the debt limit, we've been spending about $1 trillion. I believe it's about $1 trillion every 90 days, which is absurd amount of money. Where is that money going? The money is going to Ukraine. You're seeing a lot of these bills that are getting passed that essentially this, essentially border protection, which we only got like I think a couple million out of the billions that were essentially sent back to Ukraine and back to all these other countries that aren't protecting us. And ultimately understand too, again, not trying to make it political, you need to know where this money is going. This amount of money and cash flow is important in understanding how the system works. That we need to constantly be loaning money, and to be able to do that, you need wars. And also understand, because of the massive amount of illegal immigration that's been coming in, we're providing food, shelter, and now potentially free housing for voting. Understand that we've spent $185 billion last year on essentially housing illegal immigrants. And what that exactly means. That's where this cash flow is coming. That's why you're seeing food prices go sky high, and why they're also taking out of core because everybody's binging on food. People are skipping meals. Coffee has been one of the highest inflationary items because people are just running off of coffee, working 2 full-time jobs. And understand inflation is so high in these things, and also understand that, because of high crimes and everything else, your insurance has gone up. So housing and insurance have been absolutely absurd. And so you're widening that gap for the middle class, essentially from poor and the 1%. And there's almost evaporating the middle class at this point. And so much so that even new graduates from college are expecting to make $90,000, roughly around $100,000 a year coming straight out of college, when that is not the case. And the average is like 55. So just barely over where you're actually kind of getting without a college degree. But you're a little bit higher with a massive amount of debt for the most part. So being said, this is what has been fueling our economy over the past year. So even though there is data with essentially our growth is really been masked by what is actually going on, because there's no production. We are spending way more than we're actually producing things. And when you think that around the globe in general, right, you have to understand the massive amount of trade that goes on between like 4 countries, between like China, the US, Germany, and I don't know if it's England or it's some other country, but nonetheless, the massive amount of trading happens between those 4 countries. And right now, China, despite all the quantitative easing, is still getting crushed. And so is Germany, absolutely getting crushed. Now, what makes you think that you can export items to these countries when they can't buy anymore because they are in recession? And because we're strong and resilient, you have to understand that there's much more going on behind the scenes. And that's what I try to point out, that yes, eventually we will be in it. I think we are in a recession, and we've hit this Salem rule that I've talked about multiple times, how it's quote unquote beneficial. But with all the revisions that have occurred, the Salem rule has gone on months ago. It wasn't just last month or the month before, it was months and months ago. So this was supposed to be the most anticipated recession. And then we essentially removed the debt ceiling and just started printing money to bail us out, essentially what has happened. Now, this always occurs. There's always some major events going on. You can still take advantage of the market when these things are going on, but you have to understand things are pointing to 2025. You have the debt ceiling come back, so that's going to cap your spending. So you're not going to be able to keep spending the trillions of dollars every 90 days. So that's one thing you need to keep in mind. On top of all that, we don't know who's going to be sitting in president, what policy is going to be dictating what's going on. You're going to get official numbers again from non-farms, which is essentially going to tell you that everybody's been unemployed and working all gig work. Your wages that you've been artificially boosting up because there's been a smaller sum of actually people, and then ultimately understand that not everybody's getting that pay. And then now, if again we move into this, just all the illegals just automatically become legal, essentially Americans, right? American citizens at that point, just for there's having no sort of validation of who they are, that they're not with some gang or anything like that. So you have all this new influx of people willing to work for much less. So that wage gap is going to change dramatically by next year if this is imposed, right? If certain people get elected, right? And not trying to make it political, but you have to understand what is going on and how this could potentially play out. You have to look at all the options now. If green energy could do well, but that would put a lot of because if someone gets elected, guess what? A lot of people don't like Trump, or not Trump, but Elon Musk right now. And they're already starting to attack him because of the X platform. And guess what that's going to also do to Tesla? All right, it's going to start handcuffing Tesla if just depending on the administration that gets in there and what policies are put into place. Ultimately, what I'm trying to say here is that next year is lining up for a really bad year. And ultimately, understand it doesn't matter who is in office. This thing is going to essentially just get obliterated by next year. And understand what that means. You think it's bad now, it will get absolutely worse by next year, because all these things that are essentially allowing you to free spend is going to be taken away because the election's over. And if you're trying to pull more people in for votes because of whatever's going on, nonetheless, I think it's an unfair position you're putting a lot of people in that have been working their butt off. But nonetheless, not trying to make it political, looking at what was going on, that's why this essentially the current state of the economy has been held up the way it has to this point. You can verify and check all these things, and I highly suggest that you do, because you need to understand that it's more than just a headline news that's going on, that we aren't strong and resilient, that at this point next year, banks will start going over, everything will start just collapsing. Because right now you're bailing out small, medium banks just to get the vote going into next year. Once you have the vote, then they don't care. They can essentially tighten the belt back up, not allow this free spending. And then guess what happens? This whole thing's going to come crashing down at that point, because now you're handcuffed. You can't just print your way out of it. And then we need a hard reset. But most administrations aren't going to do it on their watch. If they can push it off, they will push it off. But going into next year, again, whoever's sitting in that office is going to get offloaded with a bunch of essentially a hot mess, and it's going to be bad because we're going to deal with a lot of historical data. How housing is way too high and way too unaffordable. Now you're trying to just give out free loans to anybody who essentially really doesn't qualify and shouldn't be getting those loans in a really bad environment. The banks aren't still going to want to loan in those loans. So it's a lot of empty promises, if you can see what I'm saying. And they'll tell you anything. It doesn't matter who's who's trying to run for office. It doesn't matter who it is. They'll tell you anything to get the vote. Once they have the vote, then they just offload it, and then they deal with it on the back half of those 4 years and trying to address it, whatever the case is. But nonetheless, again, with everything going on, let's actually dive into what's going on. I had a bit of a rant today. I just want to try to explain what's going on and try to get an idea of what's going on and why it's being held up, because it's important to know how it's done, because in the future, when these things happen, you bring them up and people are like, oh, no, none of that's going to happen. And then next thing you know, I mean, they bail these things out to make everything look picture perfect. And I always talk about this utopic perspective that you need to have for the general populace, because if it's not, it's going to be very chaotic. You can't control chaos unless you purposely want it to be chaotic. Then you stop a lot of different things, and then it can be very chaotic. And so you need to understand why things are put in place, and people need to be checked. People need to be responsible for their actions. And so with that being said, let's get into the weekly recap. Again, last week we did have PCE. I didn't put it on here. It came on par. Again, at this point, we don't really care other than non-farms, which we have this week. And then we have core, and then we have the cuts. And that will start dictating what's really going to happen from this point. But one of the big earnings we did have over the past week was NVIDIA. They beat expectations, but they didn't beat them by much. And that was the concerning part. You have to understand, a lot of these companies have this crazy, ridiculous growth. Eventually, they're going to get to the point where it's not as big of a growth that people were expecting, and so it starts selling off. And so we got a little bit of a sell-off. And I said it was really important to watch what the price action would be after the earnings. And so this next week, if NVIDIA can't reclaim, that's going to be a problem, because that's been what's been propping up the essentially our current infrastructure. And they also have a $50 billion stock buyback, which is only half of what Apple did, but it's still a massive buyback, going back in to buy the shares to try to push the stock up even more, to hold the market up, at least until earnings. Does that not make sense or not? Right? It all makes logical sense. And trying to take politics out of it, you have to try to remain neutral and see what's actually going on with all of this play action pass stuff that's going on. So you need to not be distracted by headline news, and actually look and watch earnings and see how things are playing out, because a lot of these great brands are doing absolutely horrible. They can't make it in this market. Is too inflationary, for one thing, and then with all the restrictions and all the crime that's going on, it's ripping these businesses apart. And then to potentially talk about gains and unrealized gains, and you're forcing CEOs to have to sell shares because they have to pay for these things, and ultimately understand whatever taxes they're going to say they're passing on to the rich is not true, because there's always a way out. There's always a loophole for the rich that essentially puts it back on the working class, and the working class has to pay all those taxes. And so just understand how this actually plays. You need to understand how the system in itself works, and not be drawn into political division. So with that being said, upcoming events. Monday's Labor Day, so the market is closed. Friday, we do have non-farms. Those are the big events that I am watching. There's a bunch of small events, a bunch of small data. We know housing is bad. We know all these things are bad. We know that by now. That's been established, and that will continue to start reflecting more and more and get worse and worse until rates start to change. And again, it's going to depend on the size of the rates that are occurring, and understand they aren't just going to cut rates. There has to be a catalyst for every rate cut. Watch the catalyst during the rate cuts. They're massive rate cuts because there's a bigger catalyst. That bigger catalyst is going to draw fear, which will sell off the market. So you have to keep that in mind. That is what we're ultimately paying attention to for next events. We don't care about all the noise. There is tons of noise going on. We need to watch the Fed and what essentially they're saying is the reasoning for what is happening, because we know there's a lot going on. I talk about this stuff all the time, but ultimately we want to know what their catalyst is that's going to be essentially cutting rates, and then how big those rate cuts are. Now, upcoming September 8th, next monetary policy, we'll also get economic projections. So we'll get to be a lot more volatility in that September, because if it's only 25 points, it's going to project what's going to happen in November and December going into the new year. Because typically we rally in the back half of the year, but now maybe we'll get some more cuts. Again, the projections really don't matter, because what you're really watching is the events leading into that projection. So you have all of October, which is going to have a lot of events, especially when you're going into election in November. So you need to pay attention to that. And then January, like I said, you have the debt ceiling is back. You have a new president. You have all these things occurring in the first half of the year, essentially to unloosen the belt and just let this whole thing fall into whoever's sitting in that office in February. And that is what's important, and why I keep trying to keep reiterating, it doesn't matter who is in office. They are just providing essentially essentially empty promises to get elected, to get your vote, to get in, right? It's actually who's going to take action. Actions matter more than words, is what I'm trying to say. So that's what we have to watch, especially with events. And Fed is the biggest thing right here. Fed have the biggest weight, because everything comes off that rate. If we want things to change, the rates need to change. But also understand that inflation is still very, very high, because again, you have a bunch of illegal immigrants. They're getting tons of free money, $185 billion last year. That are spending on money, that are essentially selling a lot of free, cheap stuff, right? And they're still have like some sort of gig economy there. It's not like real true employment. So this is why your wages look higher than they actually are, because the sum of actually real true employment is very low. Your freight liners are telling you that. That's something you need to keep in mind ultimately. So again, yes, your gig economy might be strong, but again, your overall economy is not. And that's very concerning, because nobody has benefits, nobody has retirement. People will work for the rest of their lives, is essentially what's going on. And so September is going to be important as all that unfolds in those projections and what they're expecting. Again, I think they're projecting potentially 100 points by the end of the year. So maybe they go another 25 and 50, maybe a 75, who knows? There's still a lot that's going to occur, but whatever comes out of September is going to be extremely important. It's going to essentially set the pace for what's about ready to happen. Upcoming earnings, we're not doing any more earnings at this point. We're waiting for the new cycle. That new cycle won't start till October. Again, looking for more weakness in the market. Again, if they start cutting in September, you're not going to see that in October. You're not going to see that until almost 6 months to a year from now. You have to understand, this is why they talk about that lagging effect, that by the time the Fed start cutting, it's too late, right? Because they start to see a catalyst. By the time that happens, too late, because then you still have 6 months after that it's going to get bad. So by the time they officially announce stuff, you've already lived past it, past year and a half. It's not just going to be during that time. So that's something you have to keep in mind. So we will look for more bad earnings in October and continue to go as we go in the back half of the year. Again, I wouldn't be surprised if you start getting more promises about stuff, whatever the case is, the back half of the year going into election. Now you're starting to see this as expected moves. It's coming down more toward the normal level. So 75, 11, 6, and 4. That's about getting very close to normal for expected moves. So the market's not expecting anything. Again, non-farms. Again, at this point, I don't think it'll be really that big of a deal unless they dramatically shoot up. We're at 4.3. So if for some reason they jump higher than 4.4, I'm assuming they're going to continue to rise that up just a little bit. But again, revisions have already shown that we are way worse than we actually are. And so you need to understand that you need to keep that in your back pocket for the new year. You have to be ready for when those official numbers are going to drop. Take advantage potentially of the back half of the year. We don't know what's going to happen. And this is why the market, there's so much cash on the sideline, because the market wants to know what's going to happen in the next 6 months. If it doesn't know, it's not going to place that bet on. Once we get a new president, once we get the debt ceiling, once we get essentially these banks are going to fail. So it really doesn't matter what you put in place by next year. Banks are going to start failing because you can't bail them out anymore. these are things, it's just a cascading events of bad things that right now, oh, you're really holding this thing together with duct tape. And then by, again, next year, it's going to unravel. It doesn't matter who's sitting in there, but there's going to be a lot of fingers pointed come in February, March of next year, when things are just automatically just crashing because of what's going on. And understand that, again, they can't keep kicking this can with a debt ceiling. They have to actually repair what's going on. And understand the reason they did that was because, again, they don't want, essentially a vote against the institution is ultimately what's going on. That's what you have to understand why some people are more popular than others because of that fact. And so, with all that being said, again, it's not trying to make this political, but just trying to, again, show you what the outcomes of what could potentially happen here is. There's a lot of what if scenarios. But ultimately understand, when I talk about the banking system is ultimately the problem, and the debt-based system, and these cycles occur all the time. You steal money from the middle and the poor, and you continue to invest back in the rich. So it doesn't matter what occurs, what quantitative easing is going to happen. Quantitative easing isn't going to happen when nobody has confidence, when the banks don't have confidence, when the consumer doesn't have confidence, when the business doesn't have confidence. You don't have a normally functioning society if there is no confidence in the system. And right now, you essentially sucked all that out with quantitative tightening. And what you're doing is again, funding people that are non-Americans. Not saying that I don't have a problem with that, right? But ultimately understand there should be official ways to make sure that there's not dangerous people that are coming in, is ultimately what I'm trying to say. We don't want dangerous people coming in and then wreaking havoc in a society, and that's essentially burdens everything. You can't grow. And that causes a lot of problems economically, and understand how that can affect stock market and everything else if it's chaotic. And we are one of the biggest countries that run off the stock market. Nobody else is really invested outside of the US. So we have to make sure that things are okay, right? So with all that being said, again, short video today, but just maybe it was a lot of ranting, but nonetheless, trying to provide perspective, since we're kind of getting that lull period right now. Again, we have a lot of big things that are coming up, and it's not saying that something can't happen over the weekend. A lot of big news can really change the pace at which this all goes off, and you have to understand that is typically there's always something going on that could potentially be a threat to the economy, whatever the case is. But at this point, it hasn't been as high as it currently is, and that's what you need to understand. So there's a lot of tension, especially global tension. That is very big and concerning. So this is why this all really matters, because everybody else is in a very bad position, and you can't say that we won't be, because we sure as well will be with the amount of spending that we did when it starts getting capped. So with all that being said, again, have a great day, and I'll see you guys on the field.